Welcome back to the Deep Dive. Today, we're doing a full systems check on Subros Ltd, the powerhouse of Indian automotive thermal products.
That's right. We've gone through their Q2 FY26 financials, the investor deck, the conference call, all of it.
And our goal today is really to give you the shortcut, right? To get past the headlines on Subros' performance for the quarter and a half year ending September 30, 2025.
Exactly. And we want to see where the real growth is coming from, figure out how sustainable that profitability really is, and look at what their big push into commercial vehicles and green mobility actually means.
Yeah, because this isn't just any supplier. Subros is a massive joint venture. Partners like Denso, Suzuki. It's India's largest in AC and thermal products.
Pretty much a pure play on everything that heats and cools in a vehicle. They're kind of a proxy for the thermal side of the whole auto sector.
Okay, so let's dive in. What are those headline numbers telling us?
All right, let's look at the standalone results first. Q2 FY26 compared to the same time last year, Q2 FY25.
Revenue from operations. Looks like it grew about 6.22%. Hit ours, 879.83 crores. Solid, but maybe not earth-shattering.
6% is decent, yeah, especially given the market had some shakiness. But here's where it gets interesting. Look at the profit number.
Okay. Profit before tax, PBT, jumped nearly 12%. And profit after tax, PET, up 11.36%.
That's the puzzle.
Wait, hang on. Top line grows 6%, but the bottom line jumps over 11%. Profitability accelerated like twice as fast as revenue. That usually screams massive operational improvement, right? Like they suddenly got way more efficient at making things.
You think so. But then you look at the core operating margin, the EBITDA margin. It was 10.04% this quarter last year. 10.03%, basically flat.
So it wasn't operations then. That big jump in PBT and PFD, it didn't come from just building stuff better or cheaper.
Nope. Something else must be going on, probably hitting the other income line.
Okay, so that's the key thing we need to keep in mind. The profit growth wasn't purely operational. But before we solve that mystery, how did they even manage that 6% revenue bump when the overall auto market was kind of weak?
Good question, because you're right. The broader Indian passenger vehicle market, the PV segment, actually dipped slightly, about 1.5% year over year in Q2. Mostly inventory adjustments.
So for Subros to grow revenue by 6%, they must be doing something right or tapping into different areas.
They are. I mean, September did show some improvement. Early festival demand, that GST cut on small cars helped a bit.
But that wouldn't explain outperforming the market that much.
No. The real kicker, according to the sources, is coming from commercial vehicles, CVs, and also railways.
Ah, the trucks. That mandatory AC rule for N2 and N3 trucks kicked in this quarter, didn't it?
It did. And it's a total game changer for what they call content per vehicle.
Right, because instead of just a basic blower, trucks now need a full AC system.
Exactly. And management said the thermal content, basically the value of their parts on each truck, has jumped anywhere from 2 times to 4 times. That's a huge multiplier.
Wow. So what does that look like in actual revenue?
Well, get this. Their truck business revenue for all of last year, FY25, was about 125 crores.
Okay.
In just the first half of this year, H1 FY26, they've already booked 105 crores, and they expect to easily cross 200 crores for the full year.
Okay, so that mandate basically handed them like a 60% growth spurt just in that one segment, instantly.
Pretty much. And don't forget railways. It's smaller, but it's growing fast. Up 70% in the first half compared to last year. They just won a new tender, too, worth around 27 crores, so they're diversified.
Good move.
Yeah.
And what about the core PV space? Any specific trends there?
Yeah, the shift towards greener options is already significant. Thermal systems for hybrid electric and CNG cars, that's already 24% of their total revenue.
Or a quarter of the business already. Wow.
And that part grew 30% in the first half. So this isn't some future dream, it's happening now.
Plus, that GST cut you mentioned, it helps their main customer, Maruti, especially in the small car segment. And Subros dominates that space, right? They have like 41–42% market share in passenger car ACs.
Exactly. So if Maruti sees better sales in the second half, especially in those smaller cars, Subros is perfectly placed to benefit.
Okay, let's circle back to that profit mystery. 11% growth on the bottom line, but flat operating margins. You said it wasn't operations. So what was it? But first, were there any drags on their operations? Any cost pressures?
Oh, absolutely. Before we get to the good news for their profit line, you need to understand the headwinds they were facing. It wasn't easy.
Okay, like what?
The big one was material cost. As a percentage of sales, it jumped quite a bit just between Q1 and Q2 this year. Went from about 71.8% to over 73%.
Oof, a 1.3% jump in your biggest cost component in just 3 months. That's tough.
It is. And management chalked it up to rising commodity prices, some foreign exchange impact too. And crucially, they mentioned that when their costs go up, getting compensated by customers, price increases usually lags by a quarter.
Ah, so they basically had to swallow that cost increase in Q2, hoping to get it back later.
Right. They absorbed it for now. Plus, staff costs were also up a bit. Annual salary hikes, some new hiring. It pushed employee costs as a percentage of sales up slightly too compared to last year.
So if anything, the core operations were actually under more margin pressure this quarter.
Exactly, which makes that 11% profit jump even more surprising until you find the reason.
Which is the other income item.
Precisely. There was an exceptional income item booked this quarter. 13.39 crores.
13 crores. Okay, where did that come from?
It was a government incentive, apparently a long-awaited payment from the Gujarat government linked to an investment scheme for their Kanuta project.
Ah, so a big one-time boost. 13 crores is pretty significant when your total profit after tax for the quarter was around 40 crores.
It definitely is. It really changes how you read the Q2 results. Yes, sales were decent, driven by that CV content boom, but that impressive double-digit profit growth, it heavily relied on this non-operational, one-off government payment.
So for you listening, that's the key nuance, isn't it? Underlying operations were stressed, costs were rising, but this incentive landed at just the right time to make the final PAT number look really strong.
Yeah, it shows their strategic investments can pay off in unexpected ways, like incentives, but it also underlines that managing those commodity costs is still a major ongoing challenge.
Right. And speaking of strategic investments, let's look forward. They're clearly betting big on green mobility, EVs, hybrids. What's the play there?
The content story gets even more interesting here. Management laid it out pretty clearly. Just the HVAC system in an EV brings in about 1.6 times the revenue of a conventional car's HVAC.
Okay, 1.6x for the HVAC alone.
But here's the really crucial part. If you look at all the thermal stuff except the e-compressor, so the main HVAC unit, condenser, radiator, hoses, pipes, all that,
Yep.
the value of that package in an EV is almost double what it is in a standard internal combustion engine car.
Double. Wow. So even if someone else makes the expensive e-compressor, Subros still gets a massive revenue uplift just from the shift to EVs because all the other thermal parts are worth more.
Exactly. They have this built-in leverage just from the technology shift itself. But they're not ignoring the compressor either.
No. What's the plan there?
They said discussions to actually localize the e-compressor, make it here in India for both hybrids and EVs, are at a very advanced stage with their collaborator.
So potentially making the whole system.
That seems to be the goal. They expect to have specific plans firmed up in the next 3 to 6 months. That's a big step towards capturing the whole value chain.
And are they building the capacity for all this?
Yep. That new green manufacturing plant they're building at Karkad, it's moving ahead. Total investment planned is around 150 crores. They expect parts of it to come online around June or July next year, timed with customer needs.
Okay, one more operational thing that caught my eye in the H1 results. Negative cash flow from operations.
Ah, yes. That sounds bad on the surface, doesn't it? Especially with that big incentive coming in.
Yeah, why was cash flow negative?
It was actually a deliberate strategic choice by management.
How so?
They consciously decided to increase their inventory levels by over 75 crores.
Why would they do that? Ties up cash.
To de-risk. They were worried about geopolitical issues, port delays, all the supply chain headaches we've seen, so they built up a buffer stock.
Ah, so they spent cash on inventory to make absolutely sure they wouldn't shut down their customers' assembly lines if shipments got stuck somewhere.
Exactly. It was about ensuring supply continuity for their big OEM partners, even if it meant the cash flow looked weaker in the short term. It shows where their priorities lie, stability and partnerships.
Makes sense. So looking ahead, what's the overall guidance? What are they aiming for?
They're pushing for double-digit top-line growth next year, FY27, and they hope to get those operational margins back up towards their target of 12% again by FY27, assuming, no major market shocks. #TechOutro.
Okay, so let's try and wrap this up. The core story for Subros this quarter seems to be pretty strong performance, driven by grabbing that mandated growth in trucks and also doing well in railways.
Right, and they managed that really impressive bottom line jump, mainly because of that significant one-time government incentive, the 13.3 non-crores, that really helped paper over the very real pressure they were feeling from rising material costs.
So the short-term picture is trucks, railways, and that handy incentive payment.
Yeah, but the longer-term narrative, the one you should really keep an eye on, is that structural shift in value. Their products are just inherently worth more in EVs and hybrids.
That 2x content figure excluding the compressor.
Exactly. If the basic thermal system on an EV brings in double the revenue of an IC car system, and they're building new capacity like CarCod and planning to localize e-compressors, well, what does that imply for their business over the next 5 years as electrification ramps up?
Yeah, think about that compounding effect. Double the content value applied across more and more vehicles. That's definitely something to mull over.
Indeed it is.
All right, thank you for joining us for this deep dive into Subros Ltd. We'll catch you on the next one.